All right, allow me today to talk to you about a powerful strategy or way to use the volume profile indicator. All right, here's a strategy that works if you incorporate the volume profile, or anyone who does, into their own trading, specifically when we are looking at the future markets. Now, I'm going to show you an example using the NASDAQ 100 futures and how you can get into beautiful setups. If you want to use the volume profile as a tertiary tool to help you out, first and foremost, the most important concept that I always talk about and discuss, and you should have or know how to or have already mastered, is market structure. Now stop. If you have not mastered this concept, I'm telling you right now, please do yourself the biggest favor. This is me being 100% honest with you. You will fail and not succeed in the business of trading until you master market structure. You may be asking why, okay? For all those that do not understand, what market structure is, or how powerful it is to, aid you in your trading. You have to master it because it's what's going to allow you to be able to read the market. You have to get an understanding which direction to trade. Are we breaking structure to the upside, or breaking through areas of structure in a bullish trend to the upside or to the downside? You have to figure those things out. And you have to understand at any given point the market could shift to where we start maybe having a bearish downtrend, and then we have some minor areas of structure above us in which the market could turn back around, pivotally speaking, and then start to break those areas. And if so, then the market could be, maybe shifting or reversing direction. You have to be able to follow, like I always talk about, the flow of the market. Is it breaking major area? Is it breaking minor areas of structure? Have to be able to visually see this. Now, today's video is going to be centered around just a few areas in which, specifically speaking, today I want to show you trades that could have been taken on the NASDAQ 100 specifically, and we're going to incorporate the volume profile as part of a strategy to, it can aid you in getting into very good trade setups. All right, I use it like a tertiary tool, but I really speak upon it like the GPS. Okay, I use it as a navigation tool in a sense to kind of give me or let me know, hey, am I in the right area to look for a trade to go long or to go short? Now let's go over to the chart. I'm going to show you on a higher base chart, because this is where this is the chart that I use to mark my zones when I'm talking about zones, supply, and demand. So let me show you in reference to the volume profile. People always ask, well, hey, Mike, what is that on the right hand side of your chart there? This is a volume profile. Okay, this is a composite profile of the market. Okay, I believe I have it set for a set period of days. It really doesn't matter, guys, because when we're talking about trading, especially for intraday trading, specifically, you really want to kind of look at maybe the last day or two in corporation, what's going on in real time in today's market. In today's session. So that's what I'm looking at. I'm looking to the left hand of my chart, like I always do, because I talk about, if we're moving back to the upside here, are we breaking minor areas of structure or breaking through major areas of structure? You have to be able to see these things. Again, I always pay close attention to market structure. That's number one. Within 5 minutes of trading, I've identified the ways in which I want to trade, meaning the direction. Secondly, I mark off my higher base zones, supply or demand, off of a higher base chart. And then thirdly, I use a lower base chart, like my 12 range chart. That's my execution chart to get into a trade. Now, the strategy and how I trade, I talk about that, throughout this channel. Yes, there's several hundred and some videos, but the reason why there's so much video content, because I pound. I'm beating the topic or surrounding around the strategy and how I personally trade, not forcing anyone's hand and how I trade. I'm just telling you, this is how I do it. It's up to you as a trader to basically, it doesn't matter whose trading strategy it is or where you kind of grasp information or learn from an instructional basis. You want to be able to take it upon yourself to see if things work before you put them into play. Trust that, all right? Because lots of people like to always point fingers and say, "Hey, that strategy didn't work." Look, we have a community here on within this channel here. We have a Discord community. It's free. We have successful traders or people or traders that are doing well. Okay, they have pay close attention to the educational components or videos that I put out here publicly and freely on this platform using YouTube. They spent time taking notes, spent hours in and working and back testing and practicing, and now are successful themselves. Many of them have passed evaluations. Many of them are taking, withdrawals and just doing consistently well themselves, profiting. So I'm not here to toot my own horn. I'm just saying you have to be able to stick with something consistently. And if you're already making money, please stop now. Just go ahead and do something else. This is for people who are trying to find a way to consistently become profitable. I'm just showing you today how you can use the volume profile. Now, with enough said, I want to go ahead and just show you some quick examples and looking at the volume profile to the right-hand side of the chart. Now, these boxes or rectangular boxes, what you see here are zones in which I've marked, okay? Now pay close attention. All right, so for example, right here, you see right here at this zone I marked. This is a demand zone, aggressive buying that when the market was pushing higher, it was breaking structure to the upside, making higher highs and higher lows. It broke above this area here at 230 and a half or 231 and a quarter, if you want to say that. It broke above, so we got a break of structure right above that area there. Back below there, we've got two zones here. We got a demand zone here and a demand zone here. But what I want you to pay close attention to also is that where are we centrally located at in reference to the higher base chart volume profile? We are below a high volume area, okay? So if the market is moving to the upside, okay, yes, and this was a supply setup right here. This was a supply zone that the market reacted from and pushed lower into this area of demand. Now you could have taken this trade here, going short, and it moved back to this area of demand. But when we are below a key area of volume, and especially if we're in a low volume area and we are trailing to the upside where the market is breaking structure, and you have a beautiful demand setup just like this right here, look for an opportunity to go long if you get the rejection. Now the rejection, for me, I like to use my lower base chart as part of the strategy, which I cover in so many videos here on the channel. So please take the time to watch the videos, and you know, you will, if you take the time, you should be able to understand how the strategy breaks down. It's pretty simple, guys, if you just spend time back testing and practicing it. I'm telling you this because people have found success in doing so here on the channel, and who are members of the community. So also what I'm trying to say is here, look, we're below a low volume area. The market likes to move from a low volume area to a high volume area, okay? All right, and then once it breaks a high volume area, back up through a low volume area to the next high volume area. Or it likes to move from a high volume area through a low volume area to the next lower high volume area, okay? So it likes to move to those high points, okay? Because just imagine if you have a barrier or something that's protecting you. You have a wall for protection, okay? So essentially speaking, where you have these high volume node areas or these big peaks at, those are protection points for the markets. And in the market, these are areas where there have been accumulation of orders put on, okay? Now, I say try not to take those trades right at those specific high points, okay? Because the market likes to rotate and range at those areas. Look to take trades above a high volume area if you're looking to go short, and below a low volume area if you're looking to go long. So in this case, in the stands, we are looking to go long, okay, below a high volume area at a key area of demand off of higher base chart. We go over to the lower time frame chart, a lower base chart, look for the rejection and go long. Now, I'm not going to go into detail about the full-on strategy when it comes to supply and demand. I'm just talking about volume profile, using the volume profile as part of a strategy to aid you in your supply and demand trading that gives you more confirmation or confluence, okay? Below the high volume area here, this massive high volume area, there's a demand area here. We get the rejection, you go long. What are we aiming for? Back up here to take the highs out, okay? So if you got in the trade here around, say, 190, 195, or whatever the case may be, you could have taken it all the way back up here to 250 and above and did very, very well. Now, the market continues breaking higher here, as you can see. When we broke through this area here at 253, what do we have to the left-hand side of the chart? This is why I always say it's imperative to look to the left-hand side of your chart. We have an area over here of supply. The market broke structure to the downside right here. Okay, you see this untapped, untested area of supply. Okay, people say, well, what do you mean by untested or untapped? Watch the videos. You'll gain the information when I'm talking about. You'll understand it. Basically, what I'm saying is I like to take trades. It increases the probability of a zone. Okay, if there is a at the zone where the market hasn't pulled back to it and tested the supply zone. In this case here, it didn't. It moved quickly away from it, broke structure to the downside, continue moving to the downside. We get a nice, beautiful retracement in time, okay, back into yesterday's range, okay, at the supply zone here. Here's the key. Also, this is a major supply zone, right? All right, or it's a supply zone, to say like that, okay? Off of the higher base chart, mark it. People saw this trade set up today and over on the Discord community. Again, the Discord is free if you want to join. They saw it. Some took the trade. Some commented and said, man, that was a beautiful setup. Yes, it was. I took the trade myself, okay? Going back short. Now, if you pay close attention, where are we at in reference to the high volume area here? Above the high volume area. Remember what I said about looking for, if it's a supply setup, we want to go short, look for those areas or zones above a high volume area and take your trade back to where? This is an area of demand down here now. Take a look. You see this? So if you watch the channel and you spend time watching videos, you hear me talk time and time about taking trades from supply to demand, demand to supply. It works if you know what you're doing. So we're above a high volume area. We're at a supply area on the higher base chart. Look for the rejection, scale down to a lower base chart, look for the rejection, get into the trade, take it back down to a key area supply below a high volume area. Now we're back down below a high volume area, but where are we at just as well? Back at another area of demand right here, right down here around 240, okay? Not only is that below high volume area, not only is this a demand area, aggressive buy-in right here on the higher base chart, but it's also a pivot level, 40. Remember where, if you guys spent time watching the videos or hear me say about 40, 70, half and round numbers, 40 and 70 are also what's called hitting pivot levels. A lot of traders don't know about those levels. We have multiple means of confluence here. Higher volume, a higher base chart demand zone below the high volume area. Okay, the market likes to trade from a lower area. And think about it like this too, because you heard me talk about discounting and premium prices. Where are we at centrally located below a high volume area at this demand area? We are at a more discounted areas of prices to where the market likes to, if it's below a high volume area, is seeking out lower prices. It's at a demand zone and it's at a pivot area of 40 level. Boom, explodes to the upside. You see that? All right. So again, this was above a high volume area, trails back to the demand zone. This is below a high volume area, goes back up to and breaks above this area of this high here at 322.25. I'm saying all this stuff to say you can incorporate the volume profile indicator as part of your strategy, trading supply and demand, if you really know what you're doing. But the key component is market structure. The next key component is marking the appropriate or correct levels or zones, okay, when it comes to supply and demand. And then using everything else as a means of additional confirmation and confluence to just build up more energy or build up more confluence or just confirmation to be able to take trades at certain zones. The more confirmation, the more confluence you have, the better yet the trade is more so going to work and be more in your favor. You're increasing the odds of the trade moving in your direction, simply put, okay? So then the market continues running higher. Now pay close attention to this right here. We pushed up, pulled back, we broke a small area of structure. This is I like to consider like a little small minor area of structure, break to the upside here. What is the market aiming for? Look, we are above a high volume area. Again, the market likes to move from a high volume area back to a low volume area, back up to a high volume area, okay? All right. But what it's seeking out too is to fill the gaps or voids back in these imbalances within this area. The market started pushing to or flushing to the downside. We got a selling opportunity right here. So a lot of aggressive selling to the downside. So the market has to mirror itself in a sense and fill in or cover those areas back up in a sense, moving back up. So as it's doing that, we get another break of structure, demand, aggressive buying right here, but pay close attention to the area right here. When the market pulls back to this higher base, off my 60 range, demand zone right here, aggressive buying, look to the right-hand side. What do we have here? This is, an area of volume right here. We have a small, this is a low volume node right here. In between this area is a low volume node right here, back to this area of high volume right here. This is a low volume node right here at this key area of demand on the higher base chart. You can look for, again, demand, more confluence. What do we have here? We have, check this out, 40 pivot level again at a low volume node on the higher base chart. What does it do? It rejects, boom, breaks to the upside again. This is the reason why I'm saying using the volume profile is powerful stuff. You can incorporate this powerful strategy and using the volume profile into your supply and demand trading. And you don't have to, because, purely I just like to trade and look at the market structure and price action. That's how I, trade according to just basically following the flow of the market, order flow in a sense, all right, with my own visual eyes and looking for those aggressive areas where the banks, institutions are setting things up. Okay, where are they moving? Where are they transacting at? Those are the things I pay close attention to when it comes to order flow, and I can see it with my own eyes. I don't need any specific tool to tell me that or show me that, but the volume profile is important because volume is important in the market. Without volume, the market can't drive. Okay, all right. Without orders placing on the market, hitting the market, and without volume, the market can't do. It's not going anywhere. So volume profile, you can incorporate it into your trading because, like I said, I use it like a means of a GPS. We got a high volume here, a low volume here. The market likes to move. Think about it like this. If we are in a congested area, if we're driving in our car, do we want to be in that congested area? Okay. We want to get past to it where the congestion is no longer existing and then have clear open road, right? Okay, so that's what the market does. It gets to a congested area, it breaks through it, it gets to an area where there's no congestion, boom, it breaks right through that area real quick. So when you get to an area of congestion, you may be rolling around 55, 60 miles an hour. You get to that congestion point and you're barely cruising at maybe 15, 20 miles an hour. When you break through that area, then you can, boom, ramp it back up to 50 to 60 miles an hour, get all through, you have no more traffic, and then until you hit that next high point, okay? Where there's volume at, okay? Where there's congestion at. Just using an analogy in a sense, guys. Hope you can kind of bear with me and understand what I'm trying to say. But try using the volume profile if you choose to, all right? The one I use, again, there's so many different ones out there. The one I use is not currently offered right now because the company is a overseas-based company and because of overseas sanctions that are still taking place or in place overseas. They currently aren't able to process any forward moving orders. Okay, but there are other ones. NinjaTrader has the volume profile tool that you can use, and there's other ones out there. So I don't know of all of them out there. You can come over and ask people who are part of the Discord community and say, hey, which ones have you guys using? Which volume profiles are you currently using? But the one I use is from a company called Trading.com, and it's the range volume profile one. But again, it's not offered at this point any longer. And I've been using this for, I don't know, probably just as long as I've been trading, about since the beginning, since I started trading. Not maybe the first 2 years, it probably was around the second year I started trading. So about 11 years now, I've been using this volume profile too. But I just want to share with you how I incorporate it and use it. Now, do I use it? Do I need it to trade? No, I don't. Okay. But it provides me just more confirmation in a sense, because if this was a demand setup right here and I'm saying I look over to the right and I say, where are we at in reference to on the higher base chart? Oh, we're below a high volume area. Oh, the market likes to move from a lower volume area back to the mean of a high volume area. Then it helps me and aids me and letting me know that this is just more confirmation, more confluence for me to take the trade going back up. So hopefully this content helps, many people out there to understand just kind of just from my standpoint, how I incorporate and use the volume profile. It can be very powerful if you know how to use it the correct way and the right way. All right. But outside of that, that's all I have for you guys today. If you're interested in becoming an elite member, because people, again, are always asking how can they become an elite member? And what did they receive? You get the trade breakdowns. I just posted a video a couple of days ago in reference to a beautiful trade that I took. So the trade breakdowns are videos where I go into detail about trade setups that I take. As if you're sitting next to me, I walk you through my mindset, what I'm thinking, leading up to a trade, why I took that trade, where to place your stop at, where to take profit at, things of that nature, so you can get an understanding of how the supply and demand strategy, how I trade it, how it works, and so you can get an understanding why I took those trades. Okay, so I'm not, that's up to you if you want to or not, but it's $6.99 a month. It's through the YouTube platform, and what you're doing is supporting my efforts as a content creator, and in return, I'm giving back what we like to call perks and rewards. So you get the emojis, the badges, the priority reply to comments, my trade breakdowns, the video playlist. And you receive all that for $6.99, not $699, just $6.99 a month. That's all it is. Okay. I appreciate every one of you, because there's many of you that are part of the elite member, or elite members. Thank you for doing so. Thank you for supporting my efforts as a content creator. Thank you for leaving positive comments, and for all those that have found success in watching the videos and found success in your own trading through the videos and practicing the strategy and incorporating into your own trading. I love to see that, guys. I see you guys are passing evaluations. You're posting certificates. Many of you are trading with your own funds. Hey, many blessings to you. Much success to you. I really appreciate just take you guys taking the time and putting in the hours like I did to perfecting things and making it work for yourself. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on all your post notifications so that you never miss one of the uploads here on the channel. Why would you want to miss an upload? So make sure to turn on all your post notifications. And last but not least, if this has helped you out, if you are enthusiastic and excited about maybe trying the volume profile, if you found value in the video, please leave a like on the video today. Thank you, and I'll see you in the next one. It's Friday. Have a beautiful and wonderful weekend. And I'll see you on Monday into the new trading week.